Alright, Alpha fam, let's do a quick market update before we begin. I do want to say that nothing in these videos are financial advice. Everything's for educational purposes only. This is just my own analysis on the market. Also, if you're new to this channel, if you can please like, comment, and subscribe, we really do appreciate all the support. So, let's get into this, guys. I've gotten quite a bit of DMs and people concerned and wanting to know, is this move over? Are we going down lower? Are we actually breaking out of the Wyckoff? What's happening? Are we still in the accumulation range? And this is what I want to go over today, guys. So when we first started this move, all right, I was very confident that 80,000 would be our local bottom for the foreseeable future, and that there would be two schematics that could play out. But I was very confident that this was the accumulation range, which is the range prior to the markup range. And I'm going to show you guys some schematics and what I think is going on. So there's two versions of the Wyckoff accumulation schematic that the institutions use. And you have to understand, this is an institutional driven asset class now that's institutionally being adopted. All right. Institutions are the one driving price action. Retail is not really here. It's pretty much 100% an institutional asset. Well, it's definitely 100% a macro asset, and institutions are adopting it at a rate unprecedented. All right. We've talked about this. Crypto is being adopted faster than the internet, faster than the telephone. I know it might be hard to believe this, especially with this last year's price action, but this is actually occurring, guys. 2025 was kind of an anomaly year for crypto, and I want to show you guys what I think could potentially be gearing up to happen over the next couple of weeks. So the first schematic, and the one that I thought we were leaning towards more in the beginning, was this was the spring. And let me kind of draw this out for you guys. So this was the spring. All right. So this was like the bottom level that could not be broken when we came through this bull pack. All right. And then we have another couple of levels that we found a lot of support on, which is this one. All right. And you can see the relevancy in both of these. All right. Now we also have some resistance zones. This was a major zone of resistance. And then obviously we have this top zone of resistance right here that we haven't been able to break through. All right. So let me show you guys what I mean by the two different schematics. All right. We're going to start with this one first. All right, guys. So this is the one that I thought we were leaning towards, which was we kind of created this spring type of effect, which is small deviation out of the trading range in the very beginning of the accumulation zone. And then from there, we've been basically stuck in between these two ranges. All right. You can see there's support and resistance lines. There's basically two levels of them, just like this. And where I thought we were at, specifically the other day, once we broke above this 50, is I thought we were either in two places. We were either in B, phase B, which is this right here, kind of getting this like small chop where we're going to come back down to the bottom of the first support range, or we were leaving C going into D, and we were getting ready, and this was a sign of strength, getting ready to break out, and that we were doing the first rejection, and this thing kind of creates like a bull flag before actually moving to phase E. Since that, and since, this was my first, and again, we deal with probabilities, so I'm never going to say 100% this is how I felt this was going to play out. I'm dealing with probabilities and probability standpoint and looking at the schematic and kind of what's transpired to today. I was leaning towards that this would be the schematic. All right. Now things have kind of changed a little bit in my opinion on this, because I think that what they could be gearing for this week is to actually create this spring. And let me show you what this one looks like. So if I remove this one, guys, let me bring in the other pattern. So this is the second schematic. All right. And the thing that's the characteristic about these accumulation zones are looking for the spring. All right. And this is a very specific thing that happens. It's caused and created by mass panic to create a frenzy to make people want to sell and push prices down so aggressively that they deviate outside of the trading range, create this spring. And then this is where the smart money and institutions, this is when they enter. This is when smart money buys. They buy during these periods. All right. So the reason I think that this could be something that they could potentially complete now is because of over the weekend, what do we have happen? So Trump made it comments about Canada, and basically, if they make a deal with China over a free trade deal, basically opening their ports, that they would put this 100% tariff on them. All right. So that is one macro FUD event that I think could be used to try to complete this. But not just that alone. There needs to be others. So what do I think? So this week is kind of interesting because then we also have the government shutdown. All right. So we have the government shutdown this week. And we have FOMC, and we tend to de-risk into those. So we've already got an event that we tend to de-risk in. We're already at the bottom of the range. You know what I'm saying? You can already see we're already at the bottom of the range. So I'd say we're kind of like right here. And at this point, even if we wanted to come back up over maybe the next 24 hours and try to reclaim this 50, maybe this thing kind of comes down a little bit, and then we reject, and then we actually complete that spring. All right? And they use these three events because, first off, the government shutdown is going to panic everybody because they're going to know that liquidity is going to dry up. Data is not going to be released. They remember what happened last time in October when this all kind of transpired. So if that occurs, that could be something that they would be able to drive panic to be able to drive prices down. Adding on the de-risking effect that we see prior to the FOMC and the newest tariff, scare, which is a reason why we're starting to bounce, because that Canada's prime minister came out and said, hold on, we never said we were doing no free trade deal with China. Hold on a second, and kind of retraced. And then the market's seen that and was said, okay, hold on, maybe this is being a little overblown. And then you started to see some green come back into the market. We've seen it, you can see futures, you can see, and we'll go over the rest of the market here in a second, but you can see that they're also in the green too. So with that, again, guys, neither one of these are 100% have to play out. All right, we're just dealing with a set of probabilities. But if they can create that panic over the next couple of days, I could see them deviating outside of this trading range and potentially trying to come back down into some of these lower zones that this is when the first tariff scare happened. This is where our local bottom was down here at the bottom of this region. So even if they wanted to swoop in, and it could maybe potentially look something like this. So this thing comes down, hits this area, and then it's going to immediately soak up, bounce, do its retest, and then start its next confirmed uptrend. All right, guys? Again, both of these schematics lead to the same results. All right? Both of these. Whether they can complete the spring or whether they can't complete the spring. So again, if for some reason they start backtracking and then the government doesn't shut down and, Jerome Powell comes out somewhat dovish, then this whole spring can go completely out the window. And then what we would be looking for is what we could potentially be is in C right here and starting, this is like that initial little pullback that we see once we start the markup. We kind of come back and let me kind of move this over. And sometimes the 4 hour is a better way to show this, guys. Let me show you guys a little bit better. Sometimes it's easier to kind of display these things on the 4 hour charts, guys, just so you guys can kind of get a better idea of what I'm talking about. Let me move this up here. And you guys have to understand too, all right? Regardless of which one of these that happens, they're both going to literally result into the same exact situation, which is going to be leaving this accumulation zone and finally moving into phase E, all right? So if you look at this right here, guys, what this could have been was this right here, all right? And what we're doing right now is this kind of pullback, all right? And this pullback doesn't necessarily, again, have to create a spring. And if I remove this stuff might just want to come back down where it already has, which is kind of and you see it doesn't quite come back down to the support levels, guys. You see how this one hasn't quite come all the way down to this initial order block right here where these initial price moves happen. So this could, in fact, be right here where we start to try to reclaim some of these levels. It rejects one final time, and then this thing just kind of chops sideways, guys. So you just kind of get this thing that's just kind of doing one of these, and then eventually it starts to break out, all right? I think once we get out of January and get into February, because this is another added thing, guys. Typically, when you start off a month, all right, for whatever reason, they can start off a little bearish, all right? So you'll sometimes get a bearish reaction in the beginning of the month, and then after the first few days, then the markup starts, and then we start pushing up, all right, guys? always remember that. There's a lot of things that happen in the beginnings and the ends of the months. We got options that expire, a multitude of data gets released. So sometimes you see a little bit of de-risking happen during these events. So let's show you guys the NASDAQ, because this was interesting last night. Because when this thing actually opened up, you can see down, like super down, and then has pushed up since, all right? Which is, again, it's not always 100%, but I like to use it as a general read for the next day's market. If I see futures open up fairly strong, again, we're going into Monday, guys. I think I can't remember how many, but it's like X amount of, like, out of the last 15 Mondays, 13 of them have dumped. All right, so we always have to kind of be prepared for it. We are going into Monday, so if we're going to see a reaction from any of this tariff scare, it's going to be today, because the stock market's finally getting a chance to react. Hopefully, because Canada said, hey, we're not doing that, we don't see such a negative reaction, but we need to be cognitive and aware. All right, guys? Because either way, we know kind of what the game plan is. We know where we're at. We know what the kind of tricks that these people play, guys. They're going to sweep liquidity. They have to do it. They are not going to let these people keep these crazy high leverage longs just open while Bitcoin decides it wants to go back up to $100,000. They're just not going to do it. They're going to do anything they can to try to sweep that. So something else that's interesting, Ethereum versus Bitcoin has found support in its region that it does again. Obviously, we want this thing to start outperforming again. Bitcoin dominance finally started the week off red. You can see we're just a little bit, obviously we're not like super down, but we're, making a little bit of a move back down from this region. You can see right here starting to reject. That's a good looking sign right there. That's what we want to see. We need to see some general strength come back into the market, guys. All right. We need to see some strength come back into the market. Seriously. I think it's coming, but we need to see it. All right. With that being said, guys, I'm watching today very closely. I'm very interested to see the U.S. market open. We got about 30 minutes before it does. We also have some, do we have data coming out this week? Let's check. We do have some data coming out. These are durable goods. So obviously the Fed interest rate's the main one. I don't think anything other than the PPI month over month is anything else to be concerned with. Obviously, the big one's the Fed. So we're going to be live streaming that inside of the community. We do that every single time just to make sure that we're keeping up. And I like to watch the reaction of the market. You can literally see Powell talk and the market react. It's pretty crazy, guys. And speaking of that, if this is your first time ever finding one of my videos, my name is Coach JM. I've been a digital asset investor for the past 5 years. I'm the founder of Alpha Syndicate. I'm also a crypto expert inside of Capital Club, where I host the Crypto Talk workshops. And if you're trying to learn this stuff, guys, at a deep understanding at a deep level, if you want to understand macro, fundamentals, technical analysis, if you want to be able to get inside of a network with people that are working together to learn how to really outperform the market, click the link below, guys. We'll see you inside.